Welcome to the channel. My name is Jodie Knight. You can find me over on eToro. My live portfolio there is going to be linked in the description down below. But other than that, in this video, we're going to talk about the daily chart, the weekly chart, the short and long-term, long-dated options interest. We'll talk a little bit about my price targets, where I'm going to add, where I'm going to trim. As well as that, we'll look at the general market, what data came out, what data is coming out, and if there's any good Tesla news that we're interested in. Let's just jump straight into it. All right, so no camera today. I'm still in my pajamas, but we carry on. The show must go on. So Tesla Tuesday, right? What we're looking at. So its price is pretty much doing what we thought it would. It's just kind of chopping around. We did push up through this air gap quickly, and we've come back down quickly. So like we always talk about, air gaps price tends to move through those areas quickly, and these peaks will be kind of magnets and resistance and support areas. So in the short term, I don't think too much exciting is going to happen with Tesla. We've got the event coming up. That's next month. So I think this chop will continue. It's just going to move with the market. If tech's doing well, Tesla's probably going to do okay, and vice versa. It might have some impulsive moves on short-term news, but for the most part, I don't think too much exciting is going to happen. And even with the event happening, it could be a sell the news type event, which doesn't worry me too much. Mainly, I've been accumulating Tesla for 2025 and 2026, as that's when a lot of the good stuff's going to start hitting the bottom line for the company, and then later on as well, as a lot of that's going to be a ramp up. So Tesla's still a future bet for me. Right now, it's probably considered quite expensive for what it's currently doing, but that's okay. So I'm forward looking with this company. Price targets I'm kind of looking at. I don't really want to trim at any point this year. I'm happy to add if it gets lower. If it goes sub 200 again, I probably will start adding. At this current price, 216, I'm slightly underweight by about 0.2%. So nothing major. So I'm probably not going to add unless we go sub 200. This 205 level looks pretty strong to hold, but beneath that we've got this 199. I'd probably add if we got to that, but again, I think it's just going to chop. I don't see any huge downside. But if we did go lower again, this 173 is a monster peak. But for the most part, I think we're just going to chop around in here. Topside targets, though, for next year, my models, they're still so varying. I don't have enough data to complete a forward-looking model. We really need to see some of the new products coming out and scaling up, and the prices they're charging. And for right now, it's just pure guessing. So it could be the stock in any of my models is ranging between $300 to $1,000. So I'm not really betting on any. The only thing I'm really betting on is more upside. But for the indicators, we've got RSI is neutral, which is good. MACDX Plus, we're looking good here. We've got over 50% long-term positions. Moving averages are looking pretty stable, so we're kind of holding, and flows pretty stable as well. Looking at the weekly chart, I did just amend this kind of trend, this black trend line here. It was a little bit too high. It wasn't really in the right place. But since the move, it does look like these back tests have been confirming nicely. We did break below here, but popping over is nice. So I do expect more continuation of this chop kind of between this peak and in this volume gap here. RSI is kind of neutral. Golden Cross still in play, just holding. Institutions over 50%, which is nice. And flows kind of flat with decreasing volume as well. So for the most part, I don't think too much exciting is going to happen. I think we do have the presidential debate. Is that today? I need to check that. But if so, there could be some movement on this depending on some of the topics around EV, renewables, and that kind of stuff. But we'll have to wait and see. Okay, this week's open option interest for Tesla. This 242 kind of level on this gap fill here is looking pretty good. These gaps are always going to act like magnets, and Tesla really does like to close its gaps. That does mean this one down here is a bit of a worry, although I wouldn't expect that one to close. It's a bit far out of left field on that one, but you never know. I would expect this one to fill first, as it's the nearer one, but we shall see. Moving out to the week after. Talk about buckshot. There is a lot going on here. There's a lot of negative here, so you never know. Maybe this downside one does want to fill at 148. It seems like a lot of people are singling that kind of out as a strike. But like I say, there's a lot of resistance to get to that level. 200 is going to hold pretty well. 180 is going to hold pretty well. I honestly would be shocked to see it go below 180, but crazier things have happened, and this market lately is just bipolar. 230 to the top side, which would be this local historic high as well. That's going to be a good one to stick with. But to the upside, 300 is going to be resistance as well. So there's a lot of range next week. I'm not sure why. The week after, the field starts to narrow a bit. We get rid of those really, really low targets. 175 is going to be your low there as well as resistance, support even. And then pretty much every $5 up from that as well. Resistance is pretty much every $5. So this just tells me more chop, unless we pop on some news. But if the market's just going to trade along, then it's going to be pretty bouncy. Let's take a look out again to 2025. Probably need to change what dates we're looking at these in the future, because we're getting quite close to these ones. So we have a fair bit of downside here. These old strikes here are probably kind of legacy. They're probably in the money, just kind of holding them. Top side there, $300. I don't think it might be higher. Let me move the chart. Okay. So we do have some around 400 as well. So, but for the most part, it seems more choppy than anything. I think a lot of this is going to depend or change depending on what happens around the Tesla event next month. I think it's 10th of the 10th. So definitely be curious to look what's happening with the longer term open options interest around that. But I think if we go out another year, which would be after a lot of the new products start ramping up, the market is starting to get more bullish. A lot of targets getting in 500, 510. These are going to be really, really large sticking levels for the most part. Still a lot of bearishness, but I think we're always going to get that with Tesla. It's like Marmite, the stock is. So do with that as you will. There's the non-believers and the believers. Tesla's either going to achieve at least one or two of their new products, or it's going to go bankrupt, which actually it's blown my mind that people can look at the balance sheet for this company and still think it's going to go bankrupt. Even just as a car company, they're very well managed, very streamlined, very good at cutting cost, very good at being profitable. I think for some people to have the expectation that Tesla is going to go bankrupt is ridiculous, to be honest. but you never know. Never say never. Could happen, but I'm not betting on it. Okay, so a couple of bits of news on Tesla. I mean, there's lots and lots and lots of news out there at the moment for Tesla, but a couple of bits I just wanted to point out. EU to lower proposed tariffs on Tesla by 1%. Can't hate it. We'll take it. Other than that, though, we had the Tesla roadmap, the AI roadmap, and pretty impressive pace from September to October. They are going from 3x improved miles between necessary interventions to 6x improved. That's ridiculous. That's the pace of innovation now is just insane. Loads of other little bits. Obviously, we've had the ass already. Kudos to Elon's sense of humor, but that's everyone's talking about that at the moment. Other than that, though, Q1 FSD China, we've seen a lot of movement on this already. Haven't seen too much on the Europe though, but interesting given that they're in the same kind of time frame. I would have thought Europe would be a lot more stickler on that, but we'll see. But anyway, take timelines from this with a pinch of salt. I do believe that V13 will be out in October though. It's just regulatory approval is not fast. Q1 2025, I think, is quite soon, really. But we'll see. I think China's probably going to be the one ball rolling on there. I think no one's going to be shocked by that. They're pretty innovative. Europe, not so much anymore. So we shall see. But other than that, let's take a look at the macro news. Okay, for the data, not too much yesterday. Consumer inflation expectations pretty much in line with expectations. Um, consumer credit change, interesting. I'll have to take a look more into that one, I think. Seem to be on a good track for a while, but we're definitely ramping up. So a quick read. Loans for vehicles and education surged by $14.8 billion. That's interesting. Definitely one to keep an eye on, I think. The sharp rise in consumer borrowing signals strong demand for credit. So interesting, people are starting to take a lot of credit whilst rates are still high, especially given the fact they're slated to come down soon, very soon. But I guess you could just rotate credit around anyway, for the most part. Today we've got Red Book year over year. Don't think nothing too shocking is going to come out of that one. I think we had a good month last week, not last time. So yeah. So data wise, not too much interesting. Just we can take a quick look at commodities while we're here. Because I haven't looked at that in a while since we started doing the video only. Gold, boring. People all raving about gold, but it's really done nothing for a long, long time just because it's up for a little bit. Don't see much value in it. Lithium's one I'm really interested in, minus 64% year over year. Love it. That's really going to help Tesla. Mainly, we can thank all the other EV companies that are pulling back, and a lot of supply has been dumped on the market with reduced demand. So, thank you. Agricultural, though, what we're looking with chocolate, still expensive, butter, still expensive, coffee, orange juice, tea, rubber, milk, cheese, all the old school ones. Things that are down year over year, though, oat, sugar, soybean. So pretty much even split. I mean, the red herring here is kind of chocolate, I think. Chocolate and butter, which I think butter's in a lot of stuff. So definitely one to keep an eye on. It did go up last month as well. We really want to see that start to come down again. Commodities are going to be one of the leading indicators. If these start coming up, we know that inflation is going to start coming up as price trickles down to the consumer. Just because price falls down here doesn't mean things get cheaper, though. So it's something to bear in mind. A lot of companies don't pass on these savings to the consumers. It just helps them have better margins, which helps them have price stability, which is the main thing you want to see. Price won't necessarily come down, but it should stabilize, which I think a lot of people get confused of. They think just because price comes down at the bottom end of the top end of the chain, it means that we should get cheaper goods when that's not what actually happens. Industrial, germanium, pretty even split really. Again, you've got one kind of red herring, germanium. I'm not sure what that is or what it's in, but it's definitely not something that affects what I'm investing in, so I'm not too concerned. Livestock, eggs have been a problem since COVID. We all know that. We've all been horrified when we've been buying them at the shop, so not too much of a worry there. We all know it's bad. Nothing really has changed. Monthly they are up again, but I guess there's not enough chickens making enough eggs. Electricity, year over year. A lot of people in the UK, we're getting another price cap rise. A lot of people haven't realised that price per megawatt or whatever they want to call it these days is actually cheaper, but we're going to be paying more. So again, that's what I'm saying. Like we talked about a minute ago, just because the price gets cheaper doesn't mean it gets passed on to us. The companies still have to make profits as well, and they might have other cost increases. France, I mean, they're getting a good whack. They might end up seeing some of that discount for the end user, but we'll have to wait and see. So Europe, for the most part, looks like it's doing pretty well, but United Kingdom, probably Brexit, shot ourselves in the foot. Okay, I think that's a wrap. If you found this video useful, give me a like, share with your buddies, and subscribe. Apologies if it felt a little bit rushed. I'm quite constrained for time today. Off to do some yoga. I'm getting a bit stiff in my old age, so it's good to keep on top of that. And I will see you tomorrow.